More now on Warren Buffett's $5 billion bet on Bank of America. If you missed it, if you were getting a coffee, the news just hit about 5-6 minutes ago. They are going to invest $5 billion of capital into Bank of America. This is Warren Buffett making a very strong statement about value of not only Bank of America, but U.S. banks. So we want to get some detail from David George. He's a Bloomberg Best. He's a banking analyst with R.W. Baird. He joins us over the phone from St. Louis. So, David, let me bring you in. What's your initial reaction right off the bat?
Well, obviously the initial reaction is very positive for BofA. What we've had in Bank of America for the last month or so has really been a crisis of confidence, and there's been a lot of rumors and innuendos and numbers thrown around that are kind of bordering on silly. And Buffett's investment, I think, is just really a big deal as far as confidence in this company and confidence in banks overall.
David, I heard you say confidence, and that, of course, is the magic question. If we didn't know that before the credit crisis, we certainly learned it pretty much every day during that time. But do you see, then, from your perspective, nothing wrong with the fundamentals at Bank of America, or do you simply see them as challenging?
Well, to be clear, I mean, the fundamentals for banks and Bank of America as well, and especially BofA relative to maybe some others, the litigation issues and a lot of the concerns are still out there. But, you know, expectations in the market are extraordinarily low. At $6, Bank of America got to almost 45% of its tangible book value, and that tangible book value should continue to grow over the next several quarters. So it had gotten to the point where expectations were extraordinarily low, and it looks like Buffett once again is taking the opportunity to try and be opportunistic in his investment.
David, I'm just curious, a lot of analysts have weighed in, some saying Bank of America does need more capital, and some say that the company doesn't. Where do you fall?
Well, we're in the we cannot rule it out, but we're of the view that they don't need to raise additional capital, and that regulators will give them time to work through these litigation and mortgage putback issues. I mean, to give you some perspective, Bank of America on kind of a Basel III, which is the new capital accord that banks are going to be operating under going forward, they're already well ahead of the 2015 capital standards, so while their capital is below peers, they are well ahead of where they need to be from our perspective.
David, it sounds like there are really two hurdles for Bank of America and the banks in general. Number one, do they have enough capital? You say, at least it sounds like at Bank of America, yes, they do. But number two, and more to the longer-term issue, how do they grow their loan book? How do they actually produce earnings growth that make people want to buy the stock?
Well, that's a good question. I think the biggest challenge for the banking industry today is revenue growth. This is a difficult rate environment. There's not a lot of demand for credit. So companies are going to need to rethink their cost structures. I think you're going to continue to see cost savings programs out of the banking industry. And I don't expect revenue growth to be significant, to be honest with you. However, that does not mean that these stocks are not worth substantially more than where they're trading today. These companies generate a lot of capital, a lot of earnings, and I think over time, something that could be a real positive catalyst would be more aggressive return of capital in the form of dividends and buybacks.
Now, David, only about 20-30 seconds. Sure. Bottom line, do you like the stock, and what's your target?
We do. We'd have an outperform on BofA. We've been on the wrong side of this one, but we do have an outperform on it, and our target is $14 per share.
All right, David George, R.W. Baird, thank you, sir, for joining us.